Welcome to the Fintech Times News and Views podcast. Established in 2016, the Fintech Times is a global multimedia news outlet centred around the world's first leading fintech newspaper. We report on the latest and brightest ideas from the fintech world. Follow the conversation using hashtag TFD News and Views and follow us at the Fintech Times. Hello, and welcome back to the Fintech Times News and Views podcast. I am here as ever with Tom and Francis. We've got the gang back together this week. So guys, how are you doing? How's everything been for you?
It's been a good week. I feel like I say it every week, but it's been very busy. And what we talked about a little bit at the start last week was just it's been survey season, and I felt like that's continued quite a lot this week. For whatever reason, everyone's releasing their surveys. They just want to get all their stats out, all their surveys out. So it's been really interesting to kind of see the different findings of those and just sneak peek that I've picked one of them to talk about today.
Yeah, awesome. And Francis, how are you doing?
Yeah, it's good to be back. Unfortunately, I wasn't able to be here last week. But yeah, as Tom sort of mentioned, it's been very, very busy. And I feel like we really are... It is the end of the summer holidays now. I mean, it has been for a while, but it definitely feels like it. We're really getting a lot of news coming across our desks, and a lot of it is really interesting stuff, and I'm looking forward to the conversation that we're going to be having today.
Absolutely, and what a brilliant segue, because what is the conversation we're going to be having today? Francis, what have you brought with you today to talk about?
So today I'm going to be talking about the rise in wearable payments in Canada.
And Tom, how about you?
So I am going to be talking about a study that's looking into US banks and their potentially worrying attitudes towards fraud.
And I'm going to be looking similarly about how US banks are hesitant to ditch cheques despite fraud risks. So a nice little interesting pot of articles this week. Tom, I'm going to let you go first, I think. So why don't you take it away?
With pleasure. So yeah, I've been looking at this study this week, and basically it shows that US banks believe they're at least 8 months behind criminals, with the largest institutions in the US believing the gap between banks and criminals is as wide as 23 months. And that's according to new research from payments and modernization firm Red Compass Labs. Now, for its recent study, it found that banks are drastically underestimating criminals, with respondents believing that criminals take an average of 4 months to adapt after a new financial crime is detected, when in reality, cybercriminals can exploit newly discovered vulnerabilities within days or even hours. Now, despite conceding that criminals do have an 8-month head start at least, 75% of banks revealed they are confident they can close the gap. However, Red Compass Labs found that US banks' resources are stretched across multiple types of fraud as they grapple to keep up with emerging crimes, some of which are now as big a focus as the traditionally bigger ones. One of the interesting parts of the article was a comment from Tom Hewson, who's the CEO at Red Compass Labs. And he said that banks know criminals are good at using the latest technology, yet they rate themselves marginally better. And still, only 1% of financial crimes are brought to justice. And he basically asks, how can these two things be true? How can it be that banks are very good at using technology to combat financial fraud, and yet 99% of it goes undetected and unpunished? And I just thought this was a fantastic point, especially because in the past, on this podcast, we've spoken a lot about the never-ending cycle of fraud that we see, where criminals basically exploit a vulnerability or find a new technology to use to facilitate fraud, and then banks eventually implement strategies to combat that, leading to criminals moving on to a new strategy and then starting the whole process over again. So the reason I picked this article is really just kind of wanted to ask you guys whether you think it's going to be possible to escape this sort of never-ending cycle of fraud and trying to catch up with fraudsters, or is it a case of this overconfidence or underestimation of fraudsters by banks going to be the undoing and just mean that this cycle is going to go on forever? Francis, what do you think? I'll come to you first.
Yeah, absolutely. I think it's a really interesting article, especially Tom Hewson's point, I think is really interesting, because I think you're right. A lot of the time we hear banks and financial institutions really sort of pat themselves on the back saying, we've introduced these new cybersecurity measures, and in doing so we're able to stop fraud by X amount or whatever they're doing. But in the reality of it is that it really doesn't seem to be that effective according to these stats. And I think what's really interesting about it is that at the end of the article, the Red Compass sort of discussed the viability of AI to make a big difference. And I think why it's so impactful is that AI is going to be utilized by cyber criminals. And I feel like if organizations aren't using it because they're scared of it for whatever reason, then they're just already putting themselves much further back in the fight against crime, because they're not using every single bit of tech that's available to them. And I think that's just the most important thing, really, is that any and all measures to combat fraud firms need to take, because as is mentioned in the article, it will only take a few hours or even days or even hours, I should say, for them to expose these vulnerabilities. So yeah, I think it's definitely a case of using every measure possible to stop fraud.
No, absolutely. And I think you make a really good point about AI, because obviously that's the sort of hot topic at the moment and has been for the last at least a year to 18 months. And we've seen people kind of talk about both sides of the coin. You know, you've got banks can use AI to try and prevent fraud, and yet the fraudsters have such good use and access to different AI tools now that they're basically managing to exploit vulnerabilities even faster. And right now it almost feels like an AI race. It's like, who can utilize AI as best as possible, as quick as possible? Is it going to be the banks or the fraudsters? I think historically it's always been the fraudsters that have managed to win that race and keep this cycle of sort of never-ending fraud going. And I feel like it seems like banks are almost trying to use this strategy of AI now to hopefully try and end that cycle. But
well, the big reason for that, really, though, I think, is that fraudsters are happy to take the risks, aren't they? Whereas organizations need to think about the data that's at risk, and they can't just sort of say, well, you know, if it doesn't work, then there's going to be very severe consequences. Whereas for fraudsters, if it doesn't work, they just have a different means of attack next time. So yeah, I think organizations need to take a little bit more risk, because if they don't, they're simply just going to fall behind.
yeah, I definitely agree with that. And I think it's a great point of just the agility, especially of the largest organizations. I mean, I found it interesting that it was actually the larger banks in the US that basically claimed that the gap was bigger. And I think instinctively you think, oh, the bigger organizations are going to have the best defenses and therefore have the smallest gap. But it's actually essentially the other way around, because they're so big and they have all this legacy tech still to deal with. They have all these other barriers, like you said, of assessing risk first, that it may be that actually for the larger institutions, it's so much slower for them to pivot and react to these kind of different types of fraud. But with that, Polly, what's your take? Do you think this is just going to be a never-ending cycle, or is AI going to cause the end of it?
I think, yeah, I mean, you guys have summed up really well. I will say I really like that point you just made, Francis, of, you know, if a fraudster fails, they'll just try again with something else. And I think that's absolutely hit the nail on the head, really. And I think that's why it is so difficult to catch up with fraudsters, because, you know, they've got nothing to lose, realistically. Like, they just keep going until something sticks and something works. And I guess that's kind of what makes it such a scary kind of landscape, realistically, when you think about it. Because, you know, like you guys have said and the article have said, like almost like no matter what banks do, no matter what these organizations do, fraud's still there. Like, fraud hasn't gone away. Fraud probably will never go away. And I think that's something that's quite an interesting thought. And it's interesting you guys talking about AI and kind of how much that can help. And I do think AI can help to a large degree. But is AI going to help enough to really eradicate that, especially considering, Tom, the conversation we had last week about how fraudsters are using AI as well. So it almost becomes, you know, that's almost creating another problem in itself, which I think is what happens a lot when we think about fraud and trying to fight fraud and all the rest. You kind of just keep going in this constant spiral of, you know, someone doing something and then someone fixing it and then someone doing something else and someone fixing it. So I think it is just a really difficult thing, and it's one of those things where I'm really glad that I'm not someone trying to solve the issue, because I can't think of what you do. And I think another thing that I really like and wanted to point out was a quote from the article from Tom Hewson, the CEO at Red Compass Labs, who says there's nothing organised crime wants more than for us to continue what we're doing. And I think that is also a really nice summation of kind of what I think about the whole situation, in that the worst thing you can do in any situation, not even just in like the fighting crime and things like that, but in any situation, the worst thing you can do is say that's the way it's always been and kind of hope that that just works. And as we've seen with fraud, that doesn't work, and you have to keep evolving and keep going. So, realistically, the only thing that the only things that these banks and organizations can do is keep going and use all the tools that they have at their disposal. And if they aren't using those tools, whether those tools are AI or whatever else it happens to be in the space, but if they aren't constantly keeping up and constantly changing and constantly using everything they have available to them, then yeah, they're going to fall behind, and that's where the problems are going to come in.
Yeah, absolutely. And I think you've summed it up really nicely there. It's just a case of they need to be ensuring that they're always using the technologies available to them. And even if their sort of agility is a bit slower, as long as they're employing these new emerging techniques, they're always going to be positioning themselves better. And yeah, I think it's just another case of, we just need to kind of see how the space evolves, especially when it comes to AI, because it'll be interesting to see, especially how banks utilize AI to kind of this effect of mitigating fraud as fraudsters are trying to use it to enhance their fraud success. So yeah, I think it's a very interesting time for AI and fraud in general. And yeah, I think it was just a very interesting article. But with that, Polly, I think you also got a bit of a fraud centric article. So why don't we go to you next?
Yeah, absolutely. Thanks, Tom. So yeah, quite similar in topic with my article today. So basically, the majority of US mid-sized businesses still use paper checks, even though there has been an increase in check fraud. And this is research from Kodak, who is a provider of business data and insights for banks. Basically, check fraud has nearly doubled between 2021 and 2022, with projected losses expected to exceed $24 billion by 2024. And this is despite more secure digital payment methods like virtual cards gaining traction. Many businesses continue to rely on checks. And I thought this was really interesting. And I think this is actually really ties in quite nicely as to what I was just saying for your article, Tom, about how the worst thing you can say is that's the way we've always done it. And I think this is a prime example of it. I think checks are very familiar and they're very safe for a lot of people, particularly sort of maybe the older generations, to be a bit more generalistic when it comes to, trying to navigate the new technology of like new payments and things like that. A check is very safe I say that in inverted commas. It's very familiar. But actually, there are still quite a lot of security concerns when it comes to checks. With 1 in 3 businesses open to adopting digital payment methods if banks effectively communicate the benefits of electronic payments. And I thought this was a really interesting article to talk about because I think it's kind of approaching fraud in a very different way to kind of the fraud that we were just talking about, in that, like filling in a check fraudulently is almost quite a low-tech way of committing fraud, but still something that's really plaguing a lot of banks and other financial organizations. And I think it's just really interesting that I say us as a industry, but actually I think this is very US based in terms of the research, obviously. But to have paper checks still be such a prevalent payment method is crazy. And I think that is just such a really interesting way. And I think a lot of that does come down to the idea of, people maybe aren't as familiar with the new ways of payments and they're not sure of the benefits of digital payment methods. And I think for Kodak it says that it is up to banks to position the benefits of the digital payment methods to clients in the right way and to really help their commercial clients transition from paper-based payments. But there's still this reliance on checks that doesn't seem to be going away anytime soon, which I just thought is just so interesting when you think of how many digital payment methods we have now. We talk so often about how many different methods of, making a payment you have, whether it's like Apple Pay or, different, cards, contactless, whatever. And yet some people are still writing out a little check and submitting it to their bank. And I think it's just really fascinating. But it's also, again, fascinating to think about how that is still a cause of fraud. A lot of the time people kind of contribute the digital world and this new sort of technology as to, being dangerous and being a source of fraud. But actually this is a very traditional method of writing out a paper check, and that is still a fraud issue. So it kind of goes to show that fraud is kind of an issue across the board here. But I mean, I'd love to get you guys in on this and know what you think. Like, do you think that, checks are something else that banks need to consider, or is it just a kind of a silly situation to be in where we should really be using digital payments by now? I mean, Tom, what do you think on this?
I think it's an interesting topic because it kind of reminds me a little bit of the argument of access to cash, that having paper checks is a way to keep these kind of services accessible to a larger number of people, and potentially people that aren't digitally savvy, that don't feel confident using these digital services for payments. I think that's a huge sort of thing to consider. But I also quite liked another part of Charles's comment when he said the continued reliance on checks tells us that digital payments still have a PR issue to solve. And is it a case of, even the people that aren't digitally savvy and don't have that confidence in digital means, actually they just need to be taught about, what is so positive about digital payments and how they are potentially more secure than checks, how they're going to be, processed faster, how they've got all these benefits. And potentially once people are just simply more aware of those benefits, are they then going to go, oh, well, in that case, I should have been using digital payments the whole time? I'm not sure, but I think it's something to consider for sure. And it's just an interesting sort of topic because, I can see the argument of accessibility, but it is the type of thing where, payments have evolved now. And is it just a case of maybe some banks are going to have to take the hard step and say, we're going to slowly phase out checks in whatever way we can, and really put an initiative in to ensure that people transition, well over to digital methods. So I think that's potentially the way forward, but it's whether banks are willing to kind of risk that consumer sort of disappointment about that transition. So it's just a case of who's willing to take that risk, really.
Yeah, absolutely. I think you're absolutely right. And it's one of those really interesting things, I think, of, do people just not kind of understand fraud and understanding kind of different things about, different payment methods, I guess. But I think it's really interesting to think about actually with a check. I mean, I don't know how often you guys have had to pay in a check in the last year or two, but at least with my bank, the way you pay in a check is you go on the app anyway, and you kind of use technology in order to pay your check into your bank account. So it's interesting that even though it's like a paper method and maybe a more traditional method, it's still something that you kind of have to interface with technology with. So yeah, I guess that's interesting. But I mean, Francis, what do you think? What's your take on the whole check situation?
Yeah, it's interesting because I think especially from a business standpoint, when businesses are making these money movements using checks, and it is surprising to me that, that we do still see this amount of fraud, I suppose, and this. It's because it's worrying, because not to be too cynical, but it kind of feels like some businesses are relying too much on checks because they don't need to pay for the technology integrations to have digital payment methods. And in doing so, they think, oh, well, I'm saving money because I don't need to spend money on this added security level. But then they're exposing themselves to more threats, I suppose. And in that regard, I think it seems to be that whole thing of you need to spend money to save money type of thing. And I feel like it's interesting to see which organizations are taking the initiative to really, stop themselves sort of falling victim to fraud, really, by spending money. So, eating into their profit margins a little bit, but in the long term, securing more money. So it makes sense. And I think another interesting point from the article was that Charles Kreitler, the Kodak's head of commercial banking, he talks about how firms are caring more about security now than cost savings. So I think that's an interesting point just to what I was saying there, that there is an evolving attitude now, and times are changing, and people are, or organizations, I should say, are becoming more aware about security and what is important, that it's not about trying to to profit from every last penny. It's about making sure that there are procedures in place which can ensure the longevity and in turn profitability of an organization. And I think that's what's really important.
Yeah, absolutely. I think you've summed that up really nicely there, Francis, and I can't think of anything that I want to add to that. I think it's just such an interesting situation. I think when we talk so much about digital payments and alternative payment methods and this, that, and the other, to still be faced with paper checks. I mean, even I've been sent a paper check a couple of weeks ago, so it's obviously still a thing, and not even just in the US. So it's just such an interesting thing to see in such a digital world. But anyway, let's move on to your article, Francis, with wearable payments.
Yeah, thanks, Polly. So, yeah, it's been a while since we've last spoken about wearable payments. I feel like we'll talk about them, once every few months on the podcast. But I always feel like we end the conversation saying, well, only time will tell. So we'll check in on it in a few months' time. So here we are once again, seeing how popular they really are. So Canada's payment market has rapidly digitized, according to Technology Strategies International, the market research and industry analysis company. In its Canadian Payments Forecast 2024, it revealed that contactless payment cards account for 3/4 of contactless payment transactions in Canada. However, smartphone and wearable payments have gained significant traction over the past few years. So at the end of 2023, there were almost 30 million smartphones in use in Canada, with 74% of them being NFC enabled. The number of in-store mobile transactions has grown by 42% over the year and now represents about 23% of all contactless transactions. Interestingly, the value of contactless payments has increased by more than $80 billion over the year, representing a year-on-year growth of 20%. So, the report identifies high growth segments in the Canadian payment market in the context of important recent developments in the economy, technology, and the industry. So, detailed forecasts are presented for credit card payments, debit card payments, cash payments, check payments, contactless payments, mobile payments, wearable payments, online payments, and more. And while in-store payments account for almost 90% of all consumers' payments in Canada, cards remain the dominant form factor. And while mobile payments are becoming increasingly important in remote payments and money movement activities, mobile bill payments and transfers represented 73.5% of all bill payments and transfers in 2023, with the share expected to increase to 82.1% by 2028. So more than 50% of adult Canadians use their smartphones for online shopping. Now, I realise I said payments a lot there, but it was just, it was interesting to see sort of how the digital first attitude of, the digital first attitude towards payments has really evolved in Canada, especially since the pandemic. I mean, I feel like that's something that we've seen across the globe, really. And I think that while perhaps while cash has declined, I feel like we're seeing more and more options to turn towards digital payments. And I think while, as the article sort of discusses, wearable payments aren't by far and ahead further than any other digital means, they are making up a significant factor of the current payments market. And yeah, I just wanted to sort of see what you guys thought about, is this reflecting sort of the global trends that we're seeing, or is this sort of a developed market trend perhaps that we're seeing? And as well, I just thought it was an interesting way to sort of note that every single time we've spoken about wearable payments, Polly, you'll probably like this one, is that Maclear is the one that we'd always talk about, the ring payment that I used to use. They've now announced that the program is closing down. And by the end of October, you'll no longer be able to make payments on it, and it's just going to be a normal ring again. So I thought it was interesting to sort of see that while there is a rise in digital payment methods, including wearable payments, we are also seeing that, and according to Maclear, it was because of rising complexities and rising fees that they've shut down the program. But yeah, I just thought it was interesting to see that, there is this changing attitude, I suppose, that while digital payments are on the rise, we are also seeing some fail. So with that, Polly, I'll go to you first and see your thoughts on it.
I was going to ask you about your Maclear payment ring, and the only reason I bring that up every time is because you're like the only person I know who has ever used a wearable payment method, and that was kind of what I was going to say today, in that I just feel, and again, this could be completely wrong, I could be completely off base here, and I know there's all this research and stuff, but I just feel like wearable payments just aren't a thing, really. I mean, maybe in the sense of like an Apple Watch or equivalent, sure, I can see that, but I don't know anyone who uses a wearable payment device apart from you and the occasional time you wear your payment ring, which you won't even be able to wear. Well, you can wear it, I guess, but not use in a few weeks or months' time. And I think, yeah, I mean, it's, again, this is completely from my own thoughts, but like wearable payments devices just feel so 2021. Like we were in the midst of the pandemic, everything was terrible, contactless was becoming a thing, and suddenly it was like, oh yeah, you can have these cool rings, or you can have these cool necklaces, or like cool bracelets to make your payments with. Isn't that cool? And it felt really cool and fun and interesting because everything else was so terrible because the world was ending. And again, completely from my own, that's entirely my own opinion, but tell me I'm wrong. Tell me, like, they just feel so 2021, and that's not a bad thing. And I think they are still really fun and really cool. And I think a lot of people, like you say, there's all this research, and people are still using wearable payment devices, and they're kind of still on the rise in line with all the other payment methods. And I found some research from last year to say that the global market for wearable payment technology is expected to be worth 137 billion by 2030. And I'm not doubting that's the case, but I think that will be, I don't think it's going to be specifically through devices that you just make payments with, like, for example, the McClear payment ring. I think it's going to be purely like Apple Watches and other sort of, smartphone watches kind of situations. I don't think you're going to have the funky little necklaces or like the rings or whatever else that we were told we were gonna, like brooches. I think someone had a brooch. Did they have a brooch or a necklace? I'm sure I met someone at a fintech conference and they had a really funky payment thing. I can't remember what it was now. It was a necklace or a brooch. And I really just think wearable payments technology, cool idea. I just don't think they're the trend anymore. And were they ever the trend? I don't know. Maybe they were only a trend in certain circles. I feel like sometimes we are biased in a way because obviously we speak to a lot of people in the industry and a lot of people that are like inside the technology. So like, is that a true representation of what's happening in society? I don't know. But yeah, I think as fun as wearable payment trends are, I just don't see them having that big of an impact. And I guess I don't see them having a more of an impact than any other payment method. I think we've got contactless, and with the rise of the contactless limits and things now, particularly in the UK, that's a very nice payment method to use that a lot of people like. Similarly with like Apple Pay or Google Pay, that's a really popular payment method. And I just think there's just so much going on in the payments world. I don't necessarily think that wearable payments technology is going to be the one. Could be wrong, probably am wrong, and I'm sure you're going to say something now to completely disregard everything that I've just said, but that's my 2 cents, and I'm sticking with it.
I'm not going to say it's disregarding what you said necessarily, but what I would argue is, so when we used to pay with debit cards, people then said, oh, but you can just tap it and it'll be contactless, and you can just, a contactless payment. And everyone was like, oh, interesting, but then the security risks, oh, I'm not sure I want to use that. Then gradually over time, they were like, actually, yes, this is much better, and this is what I'm going to use. And then someone went, oh, but what if you now put that on your phone? And then it means you don't need to get your card out, it's all on your phone. And then people were probably like, why would I want to do that? If I still need to go into my pocket to get my phone out, then why would I, how is that any better than going into my pocket to get my card out? Now, you can make the argument of, well, especially as you mentioned, people paying with their Apple Watches, it's, well, why are you paying with your watch when you could just pay with your phone? It's what we've always done. But there's something simple about sort of just being able to swipe your arm and have something be paid for already that I think is people, especially people that use those that technology, Apple Watches or smartwatches or whatever they might be, they're going to get used to that sort of quick and, I suppose, flexible payment process. And I think that's really where we'll start to see the rise in wearable payments, because people will just be like, right, well, I don't want to go back into my pocket to get my phone now because I'm so used to just swiping my hand over a terminal and it's paid for. So I think that will be the interesting point to see really how, or if that is the attitude that's taken forward. I feel like that is probably something that we will continue to see in probably more developed markets, I think, because I think in developing ones, the smartphone is just so accessible, and I think accessibility is really a big thing in developing markets. And I don't think wearable payments are necessarily the most accessible that everyone can get a hold of. But I do think that they definitely have their place in the current payments landscape. And I think that, that stat that you said, it was 130 billion by 2023, or was that right? Something like that.
137 billion, according to an article I found from last year. So
yeah, but I think that is that's probably quite still relevant. I don't think that's necessarily outdated. I think that is probably still very valid. But Tom, let's bring you into the conversation. What do you think? Wearable payments sort of, as Polly said, a dying trend, or were they ever even a trend? Or do you think that, there is some hope and that we could see some greater adoption still?
I'm afraid I feel like I share more of Polly's sentiment than yours, just because I've never used a ring or a bracelet or anything. The only wearable payment I've used is when I first got my Apple Watch. I was like, oh yeah, I've seen other people pay for like when they're getting on the tube, they scan their Apple Watch. I was like, that's going to be so easy. And then maybe I just needed to use it for longer, but I probably used it for like a month, getting on the tube to work and stuff. And I was like, it just feels so unnatural. Like you're like, oh, you finally get to the gate to get on the tube, and then you have to like stretch your arm across to the other side to like try and scan it, and then you're not quite hitting the right spot. And I was just like, oh, if I was using my phone, I would be through, even quicker. And it might just be a case of getting used to it. But one thing I do think about sort of phone payments specifically is, what I do quite like is, I can whip out my phone now, pay for something, and you've got that sort of biometric authentication. It scans your face, then it lets you make the payment. And I feel like whether it's less secure or not, it feels more secure than having, something wearable that's on you. And, if there's no extra step when it comes to paying with a ring, for example. If you drop your ring and someone else picks it up, I'm not sure what's stopping them from using it, straight after you've just dropped it or whatever, until you've cancelled that payment method on your phone or whatever device. So I do feel like just phones feel a bit more secure to me, and just the wearable payments trend just all felt a bit just unnatural to me, and just like, no, you know what, I'm just going to switch back to my phone because it just feels more normal. But with that, yeah, I mean, I could see what, like you said, it has its place, but yeah, for me, I don't think its place, is with me.
No, I think, to be honest, I think that argument about security it's an extremely good point, because if I had lost my Clear payment ring before and somebody else picked it up, there was nothing stopping them from just using it. So I think that is a very fair point to say. Go on, Polly.
I do feel like, though, again, this is absolutely no shade on anyone, but like, if you dropped your McClear payment ring and someone picked it up, I don't think they'd know it was a payment ring.
Well, that's the thing. Yeah, I
wouldn't. I'd be like, oh, this is a funky ring, and yeah, I don't think you'd know it
until
was a
they see it says
ring.
Visa inside, and they're like, oh, let me just see what this.
Oh,
does.
to be fair, okay, I take it back. Okay, maybe there's.
But no, that is. That is the point, I suppose, is that especially with the ring, is that people might not know what it is and just be like, oh, it's a ring. But there is nothing to there is no authentication to sort of prove that you are that person spending the money there. So I suppose in that regard, it is much more risky. You could make the argument that it's more seamless, but of course there is that line of friction that we always talk about, that organizations need to find the right balance between sort of friction and seamlessness, I suppose. But no, I think it's probably one that we're going to have to come back to again in another few months once we find some more findings that are released. But I think for the time being, I think we can sort of all agree that it has its place. It's not going to uproot anything that we know, at least for now. But I do think that, it has its place. I think that's what we can agree. It has its place.
Yeah, definitely. I think that brings us nicely to a close on our discussion this week. So thank you so much, guys, for bringing your articles. If you want to hear any more from anything that we've talked about today, head on over to thefintechtimes.com, where we've got plenty more news and insights over there. And very quickly, we will move on to what I learned this week. So each week, we are learning so much new information and insights from the fintech world, being on the editorial team at the Fintech Times, that we thought it'd be fun to share that with our listeners. So, Francis, what have you learned this week?
So this week, I've seen some research from Pairpoint Research that has revealed the potential of in-car payments, the in-car payment market, could reach 580 billion by 2030. And what that encompasses is paying for charging, paying for parking, and paying for fuel and things like that. It's all done through the car. And yeah, I thought it was just quite interesting.
Awesome. And Tom, what have you learned this week?
This week, I learned that Klarna is being launched across over 450,000 physical payment terminals across Europe, North America, and Australia, following its partnership with fellow fintech Adyen.
Awesome. And what I learned this week is that 29% of adults in the UK reported that their financial health has deteriorated over the past 6 months alone. And this is new research from Money Hub, which is quite scary. But anyway, guys, thank you so much again for joining me on the podcast. It has been a pleasure, as always, to talk about fintech with you. And it's nice to have the gang all back together as per usual. So anyway, have a great week and I'll catch you on the next one.
See you guys next week.
See you guys then.
Thanks for listening to the Fintech Times News and Views podcast. Don't miss next week's episode and continue the conversation using #TFT News and Views and follow us at the Fintech Times.